What's up, everyone? Today, I want to explain to you why house flipping is not as risky as you might think. A lot of beginners tell me that they are so scared of getting into house flipping because they are so afraid of the financial risk and they could lose a lot of money. Just like any form of investing, there's definitely risk associated with house flipping. I have friends who have lost hundreds of thousands of dollars flipping houses, and I've lost money myself too. If there's no risk, there's no reward. You just have to be aware of all the risks and learn to mitigate them. In this episode, I'm going to break down all the risks that are associated with house flipping and why you shouldn't be afraid of them and how you can mitigate the risks. If this is your first time tuning into the channel, my name is Elisa and I'm a house flipper in the Bay Area. I've been flipping houses for 3.5 years now, and 2019 was my first 7-figure profit year. I want to use this channel to educate more people to get started in real estate investing and become their own bosses. Let's start from the risks that people are most afraid of when they talk about house flipping. First of all, house flipping requires a large investment. Wherever you are located, a home is usually the most expensive purchase in your life. Even with a stable, good-paying job, most people have to save up for many years before they can afford to put up the down payment on a home. Even with a hard money loan, you still have to come up with 10 to 20% of the purchase price, either from your own money or from an investor or a partner. In some cases, the hard money lender covers 100% of the construction cost. If that's the case, you don't have to worry about that portion of the investment. To show you some actual numbers, in the Bay Area where I live and flip houses, median sale price is well over $1 million, which means to cover 10 to 20% of the purchase price, you need to invest at least $100,000 to $200,000 in the deal. To learn more about how much money you will need to invest in the flip, check out this video. When so much money is at stake, of course, the investment feels risky. The second big risk is leverage or debt. When you purchase a flip, because the investment is so large, as we just mentioned, you usually don't use your own money to cover the entire purchase price. You either use a conventional mortgage or a hard money loan or a private money loan. If you want, you don't have to use any of your own money, and you can fund the entire deal with other people's money, which I explained in details in this video. Because you borrow money to pay for the flip, if something goes wrong with the project, you could lose more money than what you own, and it will be hard for you to repay the debt. If you can't repay a debt in time, it could affect your credit and your ability to borrow money in the future. The third risk is market risk. Many people are worried about the real estate market going down all of a sudden. Talking about housing market volatility, the first thing that comes to most people's minds is probably the big crash in 2008. Even though I was not in the business back then, I saw housing prices decline by 30 to 50% in the Bay Area, and I heard some house flippers lost many houses. Other than housing market crash, economic recessions and seasonality can also cause housing market to go up and down. So the market risk can be pretty scary too. The fourth risk is contractor management. To beginners, finding a reliable contractor can be pretty tricky. In this video, I talked about how a bad contractor caused me so much trouble on my first deal and made it a big nightmare. A bad contractor can overcharge you on the job and rip you off. They can also cause the project to delay or go over budget. And worst of all, they can even take your money and run away. This actually happened on a recent project of mine. The previous homeowner hired a contractor to remodel the kitchen. The contractor did some work without permits, and he also tried to do more work without the owner's approval. And in the end, he just took the money and left the kitchen unfinished. The owner didn't have more money to hire another contractor to finish the job. That's why she decided to sell the house with an unfinished kitchen off market to me. After seeing all the potential risks, let's talk about why house flipping is not as risky as you may think. First of all, real estate is a safer investment compared to many other forms of investments like stocks or Bitcoin. There's tangible asset behind real estate investing. The value can go up or down, but it usually doesn't change as drastic. The housing market doesn't fluctuate nearly as much as the stock market because the investment is much larger and fewer people can afford it. With just a few $100s, you can invest in the stock market. But even in the lowest priced areas, you probably can't afford a house with just a few $100s. Real estate is also a lot less liquid than stocks. It takes at least 1 to 2 months to purchase or sell a house. So homeowners are usually very committed, which makes the real estate market stable. As with any investments, housing prices are determined by supply and demand. The supply is limited because we only have so much land, but the demand is always increasing with population growth. In the short term, housing prices can go up and down, but in the long run, the prices will always trend upwards. That's why real estate investing or house flipping is probably a safer investment than many other investments out there. Next, let's look at the market risk. As we mentioned, the housing market crash in 2008 really scared a lot of people. Home prices went down by a lot, and so many people lost their homes. Many people worry that because of what happened in 2008, similar market crashes could happen again in the future. But it's not true because the 2008 crash was mainly driven by mortgage credit issue. A few years leading to 2008, a lot of mortgages were approved for people who had no sufficient income or down payment. So many homeowners were over-leveraged and had no equity in their homes at all. The housing market crashed because of all the bad credit, and the issue has been fixed by all the strict regulations and guidelines in the financial industry. Nowadays, if you don't have a good solid W-2 income and a good sized down payment, it's very difficult for you to obtain a mortgage. All the rules and regulations in place make sure that we're not going to run into a credit issue again, and the market crash in 2008 is not going to repeat itself. Some people also worry about the impact of economic cycles on the housing market. In reality, home prices actually appreciated continuously at an even pace in 3 out of the last 5 recessions. So even if we go into an economic downturn, housing market is more likely to outperform other investments. Another reason why investing in real estate or flipping houses is not as risky as you might think is because the housing market tends to move slowly. Much slower than the stock market. It usually takes months for home prices to adjust by just 10%, but you can see that kind of changes in the stock market in just 1 day. Now let's talk about how you can mitigate risks in house flipping. Let's look at the contractor risk first. There are many ways for you to avoid hiring a bad contractor, and the best way is to ask for referrals. You can ask your friends and family to see if any of them had any positive experience working with a contractor on a remodel, and you can also ask other investors for referrals. You should also interview a few contractors and screen them carefully before hiring one of them on a flip. To avoid project delays, I like to offer my contractor a daily bonus to incentivize them to complete the project sooner than later. Vice versa, by putting a daily penalty in place, the contractors are also less likely to delay your projects. And to prevent contractors from taking your money and run away, you probably don't want to make any prepayments, or at least no big prepayments. For more tips and tricks on how to find a great contractor, check out this video. I've talked about how I lost money on this flip about 2 years ago when I was still new in the business. And since then, I've developed a whole strategy to mitigate risks and avoid losing money again. Since then, I haven't lost money on a single deal, and I make at least a 6-figure profit on all of my deals. There are 3 key points in my strategy, and first of all is estimate your after repair value conservatively. When you analyze deals, you want to use the most recent comps. The more recent, the better, usually no more than 3 months old. When the market is declining, the further out the comp that you look at, the higher the prices are, and they don't reflect the current market condition. You also want to use comps that are in the immediate neighborhood, usually within a quarter-mile radius, because if the comp is in a different neighborhood, especially if they have different schools, the prices are going to be different. You also want to make sure that the comps you are looking at are comparable. Are they of the same style, similar in age, and lot size? All these factors can affect your evaluation. The second key point is to over-budget your remodel cost, especially when you are new. As the project goes on, there's always unexpected costs that you didn't plan for. Over-budgeting the remodel cost can also help you mitigate the contractor risk. If later on your contractor tells you that some items were not included in the original bid, the padding in your budget can still cover it. The third key point is to turn your project around as quickly as possible. We mentioned that real estate market moves pretty slowly in general, which gives us enough time to turn projects around quickly without being exposed to market risks. If you can complete the construction on a flip within 2 or 3 months, the market risk is very limited. To learn more about how you can mitigate risks in house flipping, check out this video. If you have questions or thoughts on house flipping risk and mitigation, comment below so we can discuss. I hope you liked this episode, and don't forget to subscribe to the channel so you won't miss out on future content. Thank you so much for watching. See you next time.